Good day to everyone out there. It's Rob Folia with Folia Properties at Keller Williams Realty here in Nashville. And I wanted to come to you today with a special real estate show and just give my advice on the current market. I've had so many friends, so many contacts, so many past clients that have had questions about the market recently, saying, they know their home's gone up in value over the last few years. They know they have a ton of equity in their property, and yet they just don't know what to do, because interest rates have gone up, and there aren't a ton of houses out there, and so just wanted to offer up, just have a real conversation, talk a little bit about stats and numbers, because as always we want to use information, stats, and just knowledge, and to help make our decisions. I want to go through some of those stats, and then just kind of run through a couple of scenarios with y'all, because ultimately everybody, especially homeowners that are out there, but everybody is going to be either living at their means, above their means, or below their means. It just is what it is. They're going to be in one of those three categories. Either every month you're in a great shape, everything's comfortable. Maybe you're not getting super ahead, but you're not getting behind. You're living at your means. You might be living above your means, meaning every month is tough. It's tough to make that payment. You're doing it, but every month it's tough. And some people might be living below their means. They might, I can think of a handful of past clients right now that they got a great low rate on their home. They have a great low house payment, and because of that, and because they make good income, maybe they've had some promotions over the last couple of years, they make good money. They're living below their means currently. And so I just kind of wanted to just throw those three paths, if you will, those three scenarios out there, if you will, just be thinking about. So if you're hearing this and you're thinking to yourself, well, which one am I? Just again, think every month. Does everything feel tight? Do you feel like you're getting behind? Do you feel like you're getting ahead? Because whichever one you are, you might be living then at your means. You might, if it's it's comfortable every month, you're at your means. If you're getting ahead, you might be living below your means, and you might be living above your means if things are really tight. And so or not tight, what I'm trying to say. So let's roll through some stats. Just because I want to make sure that again, we look at some real numbers here. First things first, these are the interest rates for the week ending actually last Thursday, the 11th, and we'll have some new stats tomorrow. And yet, still wanted to go live today and share, because interest rates haven't changed significantly over the last 5 or 6 days. Freddie Mac was reporting last week 6.35% for the 30-year fixed average. We're just going to keep in mind roughly 6.5% for an interest rate. Could even be a little bit higher. I'm not a mortgage officer. These obviously aren't today's rates or anything like that. But I wanted to share this with you because we need to keep this number in mind. And I've got a couple of things pulled up. First and foremost, if you are wanting to plug in your numbers, go to my website, foliaproperties.com or foliaproperties.kw.com. Up top here, click Folia Properties, click Mortgage Calculator. You'll be able to do this for yourself. And I'm happy to run through it with you as well if you want to reach out to me directly. But let's just look at a scenario. Let's just say somebody bought their home a few years ago. Maybe they paid $350 for their home. They had a mortgage balance in the low 300s. Maybe they refinanced, in the last couple of years when rates were really low, and maybe they locked into, say, a 3% interest rate, and they currently owe $300,000 on their home. This is a very real scenario for a lot of people out there. Maybe they bought within the last 5 to 10 years, so they've got they got into their home before housing prices really exploded over the last few years, and they refinanced, got a low interest rate, and let's look at what that number might look like for somebody. Just say again, they have a 3% rate, $300,000 loan amount, and let's just say they have $200 a month in taxes, roughly $100 a month in insurance. Their payment's going to roughly be about $1,600 a month, and so the reason I want to bring this up is, and it's important, keep this number in mind, roughly $1,550 a month for a $300,000 loan amount, 3% interest rate, $200 in taxes a month, $100 in insurance a month. Because let's plug in that for say somebody that home that they bought for $350 a few years ago, say it's worth $700,000 right now. Like that, again, that's a very realistic scenario. There are a lot of properties that are out there that are like that have basically doubled in value over the last 5, 6, 7 years. And so say that's the case. Well, just say somebody wanted to move, like they were looking at their Maybe their current home's worth $700,000. They want to make an even trade, maybe get something that's in a different neighborhood, or whatever it might be. Maybe they're having to relocate. I mean, there's a lot of scenarios that are out there. And say they've got they say they've got roughly, and we'll plug in the numbers here, but say they owe 300 on their property. They'll have actually a little bit larger of a down payment than this, because let's just say their home's worth 700,000 and they want to put all their equity into there. They owe 300. So let's just say then their down payment would be 350. They're going to have some loan closing costs, some real estate commission. They're going to put roughly half down. They're going to have a loan amount of basically half the $700,000, which is what they might be thinking about for their property, because they might be thinking, well, hey, we owe 300. We know we'd have some closing costs in here. We'd have some realtor commissions. We'd have moving expenses. Want to furnish the new homes. That's why they're keeping that extra 50 out of that equity. And let's just look at how the payment compares. So we have a loan amount of 350, a 6.5% interest rate, which again we're using the number off of Freddie Mac. It might be different today. Just keep that in mind. However, I wouldn't imagine to be too different than 6.5 to 7%, somewhere in there. And let's just say everything else is the same. No PMI because there's more than 20% down, 200 a month in taxes, 100 a month in insurance. Let's see what this number looks like. Are you ready? So again, we were looking right here. We were at $1,550 a month. So let's just say someone be at $2,500 a month right here for those numbers. And so I just share this with you because that's a pretty big difference. It's $1,000 a month difference for somebody for their monthly budget. And again, every scenario is going to be a little bit different. And so let's just go back to what we talked about at the very beginning of the video, right? About living at your means, above your means, or below your means. If this household right here is paying, say, $1,550 a month, say that's at their means. Every month it's comfortable. Again, they're not getting ahead. They're not putting money away for a rainy day or investing or paying off debts, but they're getting by every single month. They're living at their means. I think $1,000 roughly of an increase of a house payment, that's going to be it's going to be a shock to their household system. And I would encourage somebody to really think cautiously about what that might look like for their monthly budget. It might be a simple fix. They might be able to sell a car, and that might free up a few $100s a month, or they might be able to live at their means at 2,500 is what I'm trying to say. And yet, if those changes aren't happening, and there's adding $1,000 a month to their monthly expenses, well, that is going to make an impact to your household budget. Again, let's just go back to this $1,550 a month. Let's just say somebody's living, kind of above their means. Like, that's really a stretch. They're not they're not missing payments. However, every single month, like they can't even go on vacations. They can't, they're driving a beater $2,000, or 2000 Toyota Camry, or nothing against Camrys, but you know what I mean. They're driving a beater, a 20-year-old car that's out there. And they're really struggling to get by, but they're making their house payments and everything. That person right there, I would say, don't move. The reality is, my advice would be, don't move. Stick with your low payment. Keep working to improve your financial position, because you'd be overextending yourself at this number. And then that third scenario is that person living very much below their means. Like, let's just say that $1,550 a month is a breeze. They're saving for investments. They can, freely go on vacations. They don't have any other debt aside from their home. If that's the case, and they feel good about a $2,500 a month payment, to me, that person, absolutely roll with it. It might be the move you're looking for. The reality is, I just wanted to share this with y'all because every household's going to be different. Only y'all know what your monthly budget looks like, how tight the numbers are every single month, how things look. And yet this is a pretty big change, for somebody to say change at about $1,000 a month. And really, the only real change is the interest rate. I mean, yes, there's a little bit higher of a loan amount, but even if we were to say it's a $300,000 loan amount to match the numbers, it's still $2,200. It's still a $700 a month change. I mean, to me, that's a pretty substantial change for a lot of people. And again, that's at a 6.5% rate, and that's at a $700,000 home value. I mean, a lot of people aren't necessarily trading, saying it's not a lateral move. Some people are wanting something bigger, and that's why they look to move. They have that $700,000 home, and they want a $900,000 home, and maybe they do qualify for it. And yet, let's just plug in all those numbers again real quick, just to walk through a real scenario. They're still putting close to 40% down, which is fantastic. And yet at that, they have a $550,000 loan amount. And I'm almost scared to scroll down and see what that number could look like for that hypothetical family. Look, almost $3,800 a month for that $550,000 loan amount to get that $900,000 property. And so I just share all this with y'all because the reality is the numbers should help you guide your decision. Real estate, man, it can be a very emotional decision for somebody. They might, whether it's their household that they've been in, they've seen their kids grow up in, or they can envision their kids growing up in that next home, and so they really want that for their family, or maybe it's just a dream come true to live in that home out in the country, and they want to make that move. Whatever the case might be, it's usually there's something that's very emotional that's tied to it. And the thing I want to encourage all to do is really, really, really look at the numbers. Make sure you feel good about things because, gosh, I was talking with some clients of mine that they're moving out of the area, and they were telling me what their current payment is and what their next payment is looking like it's going to be for roughly the same price point. And these people just bought within the last couple of years, so the reality is they locked into a low interest rate, but they're moving away. And it's a pretty substantial jump. I mean, it's not quite as big as this jump that I just showed y'all, the 1,500 to 3,700, and yet it is almost doubling their payment. The scenario that they're going to be looking at, and so I just bring that up because that it's their household, and if they feel comfortable with it, then more power to them. If they're living below their means right now, then more power to them. And yet again, I just want to share this advice with y'all that think about, are you living at your means, below your means, or above your means? And if you're at your means or below your means, if you're at your means or living above your means, make sure that you're very, very cautious about making the real estate decisions right now, because there are those people that are out there that are giving that, in my opinion, that bad advice that says, hey, buy the home now and refinance later, because the reality is we don't know what rates are going to look like in the future. Again, it's going back to the Freddie Mac site. I heard all these experts say last year, right around here, marry the house and date the rate, right? Well, if you married the house and dated the rate at 5.8%, thinking you're going to refinance it and get back to these low numbers that we saw, basically throughout the pandemic, if you did that, man, right here, September 8th of last year, 5.89%, man, we haven't seen a number in the fives since. And so again, I'm just sharing this with y'all because we don't know if you'd be able to refinance later. So again, if you're living at your means or if you're living above your means right now, be very cautious in terms of making a move. If you're living above your means right now, man, I would say don't make that move. And yet if you're living below your means, just look at the numbers, make sure you feel comfortable with it. And if so, and if there's something I can do to help you here in Middle Tennessee, give me a shout. Happy to help any way I can. If you're seeing this on social media, if you're seeing it live, just drop a comment and please like the video as well. And happy to help however I can. And if you're seeing this in your email, just hit that reply button. Happy to help however I can. And until next time, remember, guys, no question too big or small. I'm happy to answer them all. And appreciate y'all so much. We'll see you next time. Thank you.